Ladies and gentlemen, good day and welcome to the Mazagon Dock Shipbuilders Limited earnings conference call hosted by Nirmal Bang Institutional Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jyoti Gupta from Nirmal Bang Institutional Equities Private Limited. Thank you, and over to you, ma'am.
Thank you, Rutuja. Good evening, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome you to the Q4FY25 earnings conference call with the management of Mazagon Dock Shipbuilders Limited. We have with us Captain Jagmohan, in Navy retired, Chairman and Managing Director, Shri Biju George, Director Shipbuilding, Commander Vasudev Puranik, Indian Navy retired, Director of Corporate Planning and Personnel, Shri Ruchir Agarwal, Director of Finance, and Commodore Shailesh Balachandran Jangbankar, Indian Navy retired, Director Submarine and Heavy Engineering. Without further ado, I would now request Captain Jagmohan, sir, to start with his opening comments, after which we can open the floor for questions and answers. Thank you. Over to you, sir.
Yeah, good evening, everyone, and welcome to Mazagon Dock Shipbuilders Q4 and annual earnings call for the period ended 31st March 2025. My name is Captain Jagmohan, Chairman and Managing Director, and I am joined today by Director Finance and CFO, Mr. Ruchir Agarwal, Director Shipbuilding, Mr. Biju George, Director Corporate Planning and Personnel, Commander Vasudev Puranik, Director Submarine and Heavy Engineering, Commodore Shailesh Jamgaonkar. Before we begin, I would like to remind everyone that today's discussion may include forward-looking statements as defined under applicable securities laws. These statements are based on our current expectations and projections about future events and financial trends and are subject to risks and uncertainties that could cause actual results to differ materially from those anticipated. We undertake no obligations to update these forward-looking statements except as required by law. For a detailed discussion of these risks and uncertainties, please refer to our latest financial results, press release, and regulatory filings available on the stock exchange websites and our company website. As a listed entity in India, we are committed to adhering to the highest standards of corporate governance and transparency, as mandated by SEBI LODR Regulations 2015. This call is being conducted in compliance with these regulations, ensuring timely and equitable dissemination of information to all stakeholders. We are pleased to share our financial and operational performance for the Q4 and the fiscal year ended 31st March 2025. Despite a challenging macroeconomic environment, we maintained our market position and managed to deliver a strong performance with robust revenue growth and improved profitability on year-on-year basis. During this call, we will provide an overview of our financial results, discuss key operational highlights, and share our outlook for the upcoming period. Following this, we will open the floor for your questions. We request you to limit your questions to 2 per participant in the initial round to ensure that everyone gets an opportunity. I would now like to hand over to Mr. Ruchir Agarwal, Director Finance and CFO, who will walk you through the detailed financial performance.
Good afternoon. I am Ruchir Agarwal, Director Finance, Mazagon Dock. And this year we have recorded the highest revenue from operations, which is 11,431 crores. And the profit before tax is 3,109 crores. Earning per share, profit after tax is 2,324.88 crores with an earning of 57.63%. The operating profit is 1,940.43 crores, giving a operating percentage of 16.97%. And PBT to revenue is 27.2% against 26 which we reported last year. And the EBITDA margin of 28.24% against 26.93% reported for the year in last year. there is an increase of almost 2% on year-to-year basis. As far as this quarter 4 is concerned, the revenue is on the upper side. It is 3174 crores and against profit we earned is 406 crores. It is on consolidated basis and the earning per share of 8.11. If we compare quarter to quarter, our EBITDA margin is 13.74 against 35.1 which we reported in December quarter. The primary reason for difference is the provision we made in our books for the two contracts. One is for supply of FPV to Coast Guard and the other is the Denmark contract where management is of the view that there are likelihood of incurring losses on those contracts. So we have made as a prudent accounting policy, we have made the provision in our books and this is in line with the accounting standard 37. And in the years, in the next year on every quarter basis, we will be reviewing this liability and based on our assessment, we will be charging it to profit and loss and reducing the provision what we have created in our books.
Yeah, you may start now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please limit your questions to 2 per participant and you to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yes, sir. Thanks a lot. So my first question is on your medium-term margin profile. Over next 2-3 years, what kind of EBITDA margin we should look at? Will the current level of EBITDA margins be maintained or perhaps be even increased from this level?
The MDL expects margins and profitability to significantly improve over the next years as major orders materialize. We are expecting the P-75 additional submarines and the P-75I submarines contract to be signed in this financial year. And that is expected to increase our order book from the present 32,000 crore to more than 1.25 lakh crores. And these big ticket projects are the forte of MDL. And with these projects coming in, our margins and profitability are expected to significantly increase. The economies of scale of these large submarine projects and the efficiency initiatives under Shipyard 4.0 and digital transformation efforts is expected to enhance the overall profitability of the yard.
Sir, in past, the company has guided to PBT margin of 12 to 15% over medium term. Versus 25-26% that we have been reporting. So now we should, not work with the older guidance and assume the current level of 26-27% PBT margin to go up from here. Is that right and understanding?
If you look worldwide, the shipbuilding margins are approximately 15%. So the guidance of 15% is accurate. But what we must understand that in shipbuilding, revenues and profits are directly correlated to the order book and the life cycle stages of current projects. Each project stage, whether at an initial design or a mid-stage construction or final delivery, influences both the revenue recognition and the profitability significantly. So we cannot assume that since we have achieved 26% in one quarter in 1 year, we will be able to achieve the same across the board. So it is safe to have a guidance of approximately 15%. And you can, there are other shipyards who are listed, and you can look at their profit margins, and you will you can gauge what is the general range. We have exceeded the general profit margin significantly. It is because the certain projects were at a late stage where greater revenue recognition and profitability were accrued, and these projects were actually also obtained at significantly good margins. So, but I would consider that it is prudent to have a margin of approximately 15%.
So, sir, just trying to understand it clearly, because earlier you said that, obviously your margins this year were quite high and it should keep on improving because of these large orders. But so that means that we should be looking at perhaps 30% or 31% PBT margin. But now your guidance is 15%. So what is the right, number to work with?
You see, and with respect to quarter 4, you see our quarter 4 PBT is 12.8. If you see, of course, it is primarily because of the large provisions that we have made. But these high margins which you are seeing over the last 2-3 quarters is because the large projects 15 Bravo have been delivered, and we have been able to accrue significant revenues and profits due to these. However, we cannot keep this as a standard profit margin that a shipyard can, get. So I would still consider that, considering this 12%, yes, we will have an increase, but not considering the 26% what we have done over the year.
Okay, sir, very clear. And so my second question is on revenue growth. Your revenue has been growing at 20% plus over the past couple of years. Can we expect the similar kind of revenue growth over the next 2-3 years, or will the revenue growth temporarily slow down as the execution of large contracts that you will win this year, will take some time to pick up?
You have seen a growth of 20% on a year-to-year basis, but that was a time when we had a steady order book. Now, since the order book for new C-75 and 75I is little bit delayed, so some time will be going towards their design and finalization of the basic parameters for their execution. So it may not be correct to say that this 20% will be maintained, but by and large we will see that the growth of the company is almost around 8 to 10% every year.
Okay, sir. Thank you. Thanks a lot. I will come back in with you.
Thank you. The next question is from the line of Anirudh Murarka from Continental. Please go ahead.
Good evening, sir. Am I audible?
Yes, good evening.
Sir, my question was regarding Goa Shipyard Limited, one of the entities in which our company is holding a substantial stake. So any plans to list it in future?
That is
actually this is the decision of DIPAM, because we are just a shareholder based on the government guidelines, and we are not making a decision for their listing or not. That will be decided by DIPAM and MOD, what is their intention, and we will continue to be their shareholder till as per the wishes of the MOD.
The government is a shareholder there with more than 51%. While we hold 47%, the government holds 51%, and that's a decision that the government will take.
And sir, my second question is how much cash we are having on our books right now?
It will be to the tune of around 11 to 12,000 crores, but out of which 6,000 is our margin and balance is on advances from.
Thank you, sir.
Thank you. The next question is from the line of Raj Rishi from DCPL. Please go ahead.
Hi, am I audible?
Yes.
Hello.
Yes.
Yeah. What's the capacity increase expected over the next 3 to 4 years?
We have already augmented our capacity from construction of 6 submarines to 11 submarines, because we are preparing to take both the additional submarines of 75 and the 6 P-75I, for which we have already set up the SSA facility, or the submarine section assembly workshop. So that is one area, and we have also taken up land from the port for taking up small ships, and we are also having major capex plans in that land as well as in the Nava yard which we have a capex approximately 4,000 crores. So we can, at the moment, I think, construct 10 major warships simultaneously and 11 submarines.
Okay. So is it correct to say that like in 3 to 4 years your capacity will be 3x of what it is today?
Once the two capex programs comes to fruition and then it becomes fully operational, definitely the capacities will go up. So now it is at the consultancy DPR stage. The exact contours of what would be the capacity, how it will increase, we'll be able to gauge only after those DPRs comes, because there are various technical considerations to finalize there. But definitely the capacity will increase at least by 2 times.
And do you plan? This is a follow on.
Yes.
Hello.
Yes.
Yeah. Do you plan to take any debt for this capex?
So as of now, we are quite healthy and we do not expect, but it will be based on the economics of the proposal. We will see.
Okay. And any plans for ship repair, sir?
Yeah, we have a vertical in ship repairs.
We already have a vertical in ship repairs that we are currently using our wet basin as well as dry dock. So we will be able to take ship repairs of larger ships. Only one per dock. Current docks are free. And in the long term, once this capex which is there, once it gets operational, we will be able to undertake repairs of larger ships.
And in addition, we are also taking submarine repairs, and that has contributed, I think, approximately 4,000 crores of revenue for us, both in the MRLC as well as AIP plugs for the submarines which are already in service with the Navy.
Okay. And sir, this supposed shipbuilding super cycle which is going on globally, and this move away from China, etc., that should augur very well for companies like Mazagon Dock, right?
Yes, certainly. I think there is significant tailwinds that is going to further propel our growth, both commercially, the commercial shipbuilding as well as in the defense shipbuilding because of the geopolitical situation. And as you have seen, both the Navy is likely to come out with the RFP for the 17 Bravo frigates shortly, which is a 70,000 crore project. And we are poised best to take on that, although it is going to come on a competitive bidding. But MDL with its proven capability and infrastructure and having demonstrated to have constructed and delivered these ships profitably, we are best placed to actually win these contracts. In addition, the Navy is also coming with a 44,000 crore MCMV project. It's at AON stage. That's also likely, the RFP is also likely in a few months from now. So there is a lot of orders in the pipeline, both for the defense as well as for the commercial shipbuilding sector.
Okay. Sir, some reports suggested that in the next 18 months to 24 months, there's a possibility that Mazagon Dock will get orders worth 2.5 lakh crore. Any comments?
Yeah,
is poised to get?
It's like this. It depends upon whether we are able to sign the 75 Alpha, 75 AS and the 75I submarine contracts quickly. That adds up at least to 1 lakh crore. And if we win one of the shipbuilding contracts of, let's say, 17 Bravo and the MCMV contracts, we could at least theoretically reach those, order book levels. We will see. But I am confident that the submarine orders we are likely to sign quickly, particularly the 75 additional submarines.
Do you expect it by September, sir?
No, I expect that earlier because we have completed all the commercial negotiations with the Ministry of Defence and we are at virtually the contract signing stage. So maybe as early as next month, hopefully.
Okay, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Amit Kumar, an individual investor. Please go ahead.
Thank you for the opportunity and congrats for the decent set of numbers. So in the previous participant was asking that around submarine contracts that you replied that there's a possibility we can get in the next 1 or 2 months. So what is the expected value of this contract, sir?
Yeah, it's expected to be in the range of, anywhere between 30 to 40,000 crores.
Okay. And the first participant asked a question about order book, and you replied that by the end of FY26, our order book could be 1.25 lakh crore. Have I heard right?
Yes.
Sir?
That's provided we are able to sign the contracts for both the 75 additional submarines as well as the 75 India submarines project. Signing of the contracts for these two projects are crucial for us to achieve those order book figures.
So are these nuclear submarines or normal submarines?
No, conventional, not nuclear.
Okay, this 75 conventional submarines, which we are expecting in the next 1 or 2 months, is 40,000 crore.
Yes, approximately, yes.
And there is another, you are saying 75 commercial submarines, and value. What is the value for that commercial submarines? Will that same amount?
We are at actually a negotiation stages with the Ministry of Defence, so it would not be appropriate for me to give any.
No issues. And given our huge order book, so could you please provide the revenue and EBITDA guidance for next maybe 3 or 4 financial years?
As the Director of Finance just brought out, we expect revenue growth of anywhere between 8 to 10%, and our PBT margins we expect around 15%.
But assuming a huge mammoth order book of around 1 lakh crore by end of FY, so I think this guidance appears to be very conservative, 8 to 10% top line growth. It appears to me.
Actually, it takes time. If you see, it will be increasing by the time the finalization of design, placement of order comes into picture. But it will depend upon how fast we are getting the orders from the ministry and how fast we are on the drawing board. So it will depend, and it is our estimation that it will be around 10 to 15% and will increase as we progress in the project.
Okay, and I think I can see a some provisions of 746 crore in this financial year. So could you please provide some more detailed insight, and is it one time, or whether it is going to come in next year also, or whether there is a probability of reversal of these provisions, because it has impacted our EBITDA margins substantially.
Actually, what I in my opening remark I mentioned that other than 532 crores, which is we have made a provision this year, others are normal business provisions. This 532 crores we are making as an estimate for a loss which we may incur in our 2 of the contracts. One is for Coast Guard 21 ships and 6 ships of Denmark. This is based on our estimate as on date, and we will be reviewing this estimate every quarter. And based on our further judgment, we will be either reverting these provisions or there may be chances of increasing the provisions too if we find that the losses are increasing. But major part of our provision we have already brought in the book, and we will see how to mitigate this in time to come. And as we will progress, this will be transferred from provision to profit and loss account, and provision will come down accordingly.
And could you please provide some insight what kind of this provision are, like liquidated damages or some other losses?
We bid for this contract in 2022-23, and the prices of the parts and components have increased significantly after those bids. Maybe because due to the global shipbuilding boom, number of equipment pricing has shot up from what was originally envisaged and factored into our costing. But we have not yet ordered the entire package, entire equipment. So as of now, for the equipment that has been ordered, there is a potential loss that has been provisioned, as DF has already mentioned. But the real picture will emerge as we complete the procurement, and the net impact can be computed at that stage that we will be doing in a quarterly manner and reporting.
Okay, and as of now, we have ordered 32,000.
Come again.
So that is able to maintain our margin. So then,
I'm sorry to interrupt you, Mr. Kumar. Your voice is breaking. Can you please check?
hello, yes, ma'am.
Hello, Mr. Kumar.
Yes, ma'am. Yes, ma'am.
Your voice
Yes,
was
ma'am.
breaking, sir. You may please go ahead now.
Yes, yes. Yeah, I'll repeat my question. So, sir, we have an order book of 32,000 crore. So how much of these orders are cost plus contracts or fixed price contracts? Because so that our, EBITDA margins and bottom line remains profitable. Stable.
See, there in our investor presentation, actually the 32,260 crore order book, 15 Bravo, 17 Alpha, the P-75 Calvary class submarines, that put together comes to almost 20,000 crores. So approximately 20,000 crores is a few projects on fixed cost, and the rest are also fixed costs, but they are with the lesser margins. Whereas these, so out of the 32,000 crores, approximately two-thirds are projects with reasonably high margins.
Okay. And sir, like during the recent conflict with Pakistan, so and I think India should focus on more nuclear submarines. So is there a possibility that Defense Ministry can think of preparation and ordering nuclear submarines to Mazagon or any other shipbuilder? Because defense is the number one priority for India now.
Yeah, you see, that's a call that the Indian Navy and the Ministry of Defense will take. And in fact, you may have read that the nuclear submarines fall under the strategic submarine category. And I think the government has already placed an order, but that is getting done through the Navy, through the shipbuilding center in Vizag, and not with MDL.
So nuclear submarines are built by our company, or it's a highly secretive operations, or only by the Navy or?
No, it's not with us at the moment, and we don't want to comment on something which is not with us.
Okay. Thank you, sir. All the best. Thank you.
Thank you. The next question is from the line of Dipen Vakil from Phillip Capital. Please go ahead.
Hi, thank you for the opportunity. So I wanted one clarification regarding your subcontracting charges, which have increased exponentially as a percentage to sales in this quarter. So can you tell us as to what the subcontracting charges are and what can be the kind of trend that we could be looking at going ahead?
So this is in contrast to what we call as actually the subcontracting is what we normally define as when within our premises a work is executed by another party. What we mean by outsourcing is when the work is executed in a remote location, not in our premises. So because we have around 27 ships to be built simultaneously, some of this work will have to be executed outside. Now, at the same time, we are unable to give the entire ship outside. So these blocks have to be transported. Transportation cost is also involved. So therefore, there is a increase compared to executing the work within our premises. Executing it outside is turns out to be costlier than executing it inside. So the simultaneous demand of or what we call as the asking rate of all this put together is demanding outsourcing, and that is why the cost is on the higher side.
Got it, sir. So if my understanding is correct, so subcontracting includes subcontracting as well as outsourcing, right?
Yes.
Got it, sir.
Yeah, that's correct.
So one more thing you need to keep in mind is that, for the larger ships, let's say 15 Bravo and 17 Alpha, which are very, very high value projects, then it makes sense for us to use our manpower, which is a little more expensive than subcontract manpower. So whereas the smaller projects like the export project and the 21 ships that we are doing for Coast Guard ships, it is better to do a subcontract model. And that is why, since of course, like what Director Shipbuilding just said, that since we have 27 ships and another 3 large ships that are presently on order, we have resorted to little extensive subcontracting, and that's why the subcontracting costs are higher.
Got it, sir. Got it. Thank you so much for answering my questions, and all the best for FY26.
Thank you.
Thank you. Next question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, sir. I hope I'm audible. I just wanted to check one thing on the next generation corvette order. Are we are we active on the order? Are we L2, or is that an order that we've sort of given a pass?
The bids were open, and I think it's gone to GRSE and GSL and not to MDL.
Sure, sir. That was my question, and thank you for the clarification.
Thank you. The next question is from the line of Anirudh Murarka from Continental. Please go ahead.
So I just wanted to ask regarding that subcontracting, which I think the earlier participant has already, the management has already answered. But my only thing is that in this subcontract, which we have made a very high expenditure, is that in future it is getting reversed, or it is a fixed expenditure?
It's a fixed expenditure. It's a fixed expenditure.
Okay. Thank you.
Hello. Thank you. The next question is from the line of Sanjeev Zarbade from Antique Stock Broking. Please go ahead.
Yes, sir. Am I audible?
Yes.
Yes, sir. Thanks for taking my question.
Yeah, please speak a little louder.
Yeah, my question was regarding the revenue booking. So if we are able to win the two large orders for submarine, FY27 may not have much of order book revenue booking, but could FY28 we might see up to 10% of revenue booking from these two orders?
FY28 may be a little too, distant away, but definitely for FY26, we can confidently say yes, we'll be 10% more.
No, sir. I'm asking about the revenue contribution from the two large submarine orders.
Okay. So what is the question?
It will depend upon cost of production, and this will depend upon how fast we are getting orders and their execution taking place. Because first of all, after getting the orders, everything is only on the drawing board.
There's a preparatory period for freezing the design as well as for procurement. So the revenue recognition will come only after the start of production and as equipment goes on board.
But you are right. If that is the question, FY28 definitely at least the P75 additional submarines revenue will start to kick in.
Yes. So could it be around 10% of the order value or lesser than that?
Yes, you could say that because this P75 AS project is a repeat of the Scorpene P75 project which have already delivered to the Navy. And we have already commenced some kind of a preparatory work. So I think confidently we can say yes, we will contribute. It will contribute 10% of the order book of 75 AS contract value of 75 AS will come in as a revenue for FY28.
And sir, my next question was regarding the P17A, in which we have pending order book of 13,493 crore. In what time frame is it executable, sir, and in what in terms of?
We are delivering the second ship the next month, and the third ship. There are 4 ships. One has already been delivered. The second ship will be delivered next month. The third ship will be delivered maybe in the month of November. And the fourth ship will be the only one pending in the next financial year. That also we expect to deliver by April 26.
And the guarantee liabilities associated with this project will extend up to 2027. So this, what is balance shown, will progressively get liquidated in that time frame.
So bulk of this 13,493 crore will get booked in terms of revenue in FY26 and 27.
Yes, correct. In the next 2 years, that's right.
2 years. Okay. And sir, although we have delivered P15B and P75, there is 3,700 crore order backlog and 2,700 crore order backlog in these two projects, which we have already delivered. So, what is the...
So if you see 15 Bravo, we have 3716 has been, so there also the liabilities are not at over. So we we keep that for future contingencies, if any, because depending on the operational needs of the ship, we need to some expenditure has to be incurred. So two to three ships are still under guarantee.
And in addition, we have to deliver the base and depot spares to the Navy.
Yes.
That's also a significant amount. But those also we expect a considerable amount to get this year and maybe the beginning of the first half of the next financial year.
Sir, this 3,700 crore, it will get booked in 1 or 2 years, or these will...
Which one? What can you repeat?
This 3,700 crore...
I'm sorry to interrupt you, Mr. Sanjay. We are sounding very low, sir. Can you speak a bit louder?
Yeah. Sir, I wanted to know about the order pending in the two orders of Coast Guard and the Denmark order. How much is the outstanding value over there, sir?
I think, see, that delivery, I think, is in 2029, if I'm not wrong, the last ship gets delivered. Yes. So, the revenue will be split up to FY 2029. Actually, FY 30.
For the order value for the two orders that you mentioned, for which we have booked provisions,
yeah,
Coast Guard and the Denmark, what is the outstanding?
That will be put together around 3,500 crores.
Okay. And to be delivered over next 4 years, you are saying?
To FY 30.
29, 30, yes.
30. Okay. Okay, sir. If I have more questions, I'll come back. Thank you.
Okay.
Thank you. The next question is from the line of Chinmay Gandre from Canada HSBC Life Insurance. Please go ahead.
Yeah, thank you for taking the question. So most of the question has been answered. Just on the P75I, so what is the stage right now? Like we are discussing commercials, is what you mentioned. I just wanted to get check on that.
See, our technical offer has been accepted by the Navy and MOD, and the commercial negotiations were just supposed to start. When after that we have not heard yet. So we are in the early phases of the commercial negotiations for the project. Once the commercial negotiations conclude, then the contract will be signed.
And regarding the Scorpion class submarine, I mean, more or less we thought that we should get it by last year itself. So, so just operational related delays or anything else should we read in that?
I mean, it is finally the contract is signed with the Ministry of Defence and Government of India. So there are some procedural delays perhaps. So it's not entirely in MDL's hands. So, but we expect that it will conclude shortly.
Sure. And lastly, I mean, in terms of the deliveries you mentioned about the P-17A frigates, and these are pretty good margin orders, which you also kind of mentioned. So, I mean, then broadly, because we are going to deliver 3 of them, or rather 2 of them in the coming fiscal year, rather FY26 per se, I mean, then ideally the PBT margin should be much better than the 15% guidance which you are kind of alluding to.
Yeah, we hope so. We would like to under-promise and over-deliver. So, but we would like to keep the guidance at 15%, which is considered to be good for a shipyard. But we are hopeful that we will do better.
Okay, thank you. That's it from my side.
Thank you. The next question is from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yes, sir. So just one question on the contract structure. So for your fixed price contract, do you get some kind of raw material escalation over the life of the execution of contract?
So we have to procure all the raw material. So the raw material costing is a part of the overall project cost, and the shipyard does the procurement.
Yeah, but I mean, obviously these contracts can go on for 4 or 5 years, right? So do you procure everything at the beginning itself, or do you keep on procuring over 4 or 5 years? That is the question. Because
we do the procurement and the negotiations with the supplier at the early stages. However, we ensure that the delivery is staggered so that the inventory is controlled and the costs are minimal to the shipyard.
Oh, so you lock in all the raw material costs at the beginning itself in most cases?
Yes.
Okay. Okay, good. Thanks.
Thank you. We'll take our next question from the line of Rahul Arvind Padarkar, an individual investor. Please go ahead.
Hello. Thanks for the opportunity. I just wanted to ask, sir, about this delay in contract that we're considering. So are we also considered to add additional cost that would, we may incur so that we don't have to do any provisioning? And the second question is that I see that, the most of these orders are coming from either from MOD or Indian Navy. Are we also considering to go outside commercial and bid for, those shipbuilding efforts? Thank you.
Yeah, first is we are making efforts to diversify, and towards that you will see that we have already got a significant amount of contracts from the offshore segment from ONGC. Our order book from ONGC is approximately 6,500 crores, and from commercial shipbuilding is the multi-purpose vessel which we have got from a European client, which is approximately 715 crores. So that is our attempts to diversify away from the single client of MOD. With regard to what was the first part of the question?
There is not getting costed.
Yeah. See, the present fully covers all known risks. Then?
So no, if the signing of the contract gets delayed, we don't get any additional compensation for that.
Okay. Thank you.
Thank you. We'll take our next question from the line of Gagan Tareja from ASK Investment Managers. Please go ahead.
Yeah. Good evening. I hope I'm audible.
Yeah, go ahead.
Sir, the first question pertains to your other expenses and project-related expenses, which are also fairly elevated on a year-on-year basis. Can you elaborate on why that is the case?
It is as probably it is not depending upon the project life cycle. Since around 27 ships are at the early stages of construction, the entire procurement of material would have happened. So although I don't have the exact figures with me, but it is quite likely because it is at some, or it's also possible that some of the large orders of 17 Alpha, we must have procured the B&D spares or the base and depot spares, which comes to approximately 15% of the project cost. So that could be the reason for the increase in cost.
Okay. And is it possible for you to, I'm referring to the order book details mentioned in your presentation. Is it possible for you to give us, broad delivery timelines of at least the large-sized orders within the order book which are outstanding, and also give an idea of broadly over what time can you fully invoice the current order book that you have?
See, 15 Bravo, as we just discussed, we intend to finish this balance 3,700 crores by FY 27-28. And the stealth frigates may be by 29. Because there will be a small portion, but the majority we will complete by 27. And maybe a little portion of the base and depot spares and the guarantee liabilities will be there. The Coast Guard projects and the multi-purpose vessel we will complete by FY 30. FY 29-30 we will complete. The P-75 Calvary's 2,400 crore we should be able to complete maybe by majority by FY 26 and maybe first half of FY 27. The MRLC we should be able to complete maybe FY 27, mid of FY 27. The ONGC projects also we expect to complete the majority of it by end of FY 27. The AIP project will take some time because some of the deliverables from DRDO is expected to be little delayed. And anyhow, it's a 42-month contract. So that's it.
Right. Well, no, I understand that deliveries, the timelines might extend into 28 and 29, but would it be a reasonable surmise that a large portion of the outstanding order book can be invoiced over the next 2 years? Some parts may extend beyond the next 2 years, but largely we book them.
Out of the 32,000, maybe almost 24,000 crores
next 2 years.
Next 2 years.
Okay, so 24,000 can be, and you generally have a sort of arrangement on turnover targets with the MOD. Have they been finalized for FY26, and can you therefore convey it to us?
Yeah, we have finalized it, but I'm not sure whether it is can be given to public. So there are figures both on top line and bottom line and other parameters, including R&D expenditure. I'm not sure whether we can make it public.
That is currently under discussion. We'll be able to tell.
Because you disclose it in your annual reports, at least the turnover bit, if I
still under discussion with
for the current finance.
Okay. All right, sir. And in the past you have indicated that on the Kalvari class submarine, there were some cost escalations for which you got compensation from the Navy for at least 3 of the submarines, and 1 or 2 were pending. I think 140 crores of perhaps provisions needed to be written back. Is it still the case, and do you expect to book it in the coming 2 quarters?
We have made provisions for liquidated damages the submarines, and I think we have got it has come back to us for I think four submarines. We expect that there's only the first boat that the LD has not been reversed, which we expect that this financial year we should be able to reverse it. But that of course is a decision that MOD will take. But we anticipate that we will be getting the liquidated damages reversed for at least 1 submarine this financial year.
Was anything booked in Q4 from this or no?
No, not for this. That were already cushioned in the last financial year or the year before that.
Okay, and I think there was also an indication, at least in the past calls, that as the projects come closer towards final delivery, there is a reassessment of your D448 liabilities, and if you are able to deliver on time or before time, you could actually incur cost savings. Is that potentially the case with some of the deliveries due for next year, and therefore do you stand to benefit from that?
What I can tell you is what has happened in the recent past. All the 4 15 Bravo destroyers were delivered ahead of schedule, and the shipyard has benefited because of the early deliveries.
Right, sir. The final question from my side, the master ship repair agreement that you have with, I think, the U.S. Navy, since signing, I mean, do you foresee any commercial contribution starting from that in the near future, or is it still some distance away?
Yeah. So we are still one of the contenders, but the issue is the vessels that are coming for repairs. Some of them are large and that will not fit into our current infrastructure. So we will participate in that signed agreement only for vessels which can be accommodated within our premises. So a couple of offers which had come, we couldn't participate because of this.
Okay, fine. Thanks, sir. Thank you. I'll get back in the queue. Thanks for taking my questions.
Thank you. Ladies and gentlemen, you are requested to please limit your questions to 2 per participant. The next question is from the line of Raj Rishi from DCPL. Please go ahead.
Yeah, thanks for the follow-on question. Any plans for a tie-up with Korean shipyard or something? Because some news reports suggest that some tie-ups are on the anvil with Indian shipyards.
The Ministry of Shipping is, trying to promote shipbuilding within the country, and it's actually much needed. And they are planning to have 4 large clusters by 2030 and operational by 2035. And the Ministry of Shipping is looking at large shipyards like us to tie up with some major shipyards, global shipyards. We are at the very, very early stages of examining this, but we will keep our options open wherever we are presented with good business opportunity.
And the previous person was asking about this mastership agreement you have with the US, and the answer was that you could not accommodate because it was much larger than what you can accommodate. Do you expect any business on this front in the future?
See, this is a large US fleet which is based out of Singapore, primarily servicing the Indian Ocean region. Now, most of these vessels are large. Small vessels can come. See, there is a draft limitation also in our program.
Okay.
So that is why we are unable to accommodate. So it's only a very small subset of the entire fleet which can come here, and when those things for repair, that is the time where we will have the opportunity to participate. That's what I mentioned. So right now, I don't see anything in the offing in the immediate future.
And so, what's the export potential business for MDL in the next 1 or 2 years?
Right now, we already have an order as mentioned by CMD for 6 vessels, 715 crores. If everything goes on well, there is an optional clause also in that where they will order 4 more ships. So, but that will depend on how we are able to deliver these ships in time and within the contracted cost. So that is a call which we will have to take later. The potential
and
is...
so your... yes, sir.
Potential is there for export order. These are the vessels... These are all cargo ships which completely fit into our infrastructure. Yes.
And so your collaborator for P75, I think Thyssen Group, was talking about making India a hub for submarines. So you expect MDL also to benefit?
Yes, of course. Our collaboration with them is for the P75I project, for which...
Hello.
Significant amount of transfer of technology and indigenization. There will be more than 60% of indigenous content in this submarine, much higher than what we have done for the Scorpion project.
Okay.
Yeah, please go ahead.
Mr. Rajshri, please go ahead with your question.
Yeah, the question was, Thyssen Group has talked about making India a hub for submarines. And since they are your collaborator, how do you stand to benefit from this if it happens?
First, this is a part of the P75I project, and we will be constructing these 6 submarines for the Indian Navy in collaboration with Thyssen Group. And the contours of the contract is that Thyssen Group will significantly transfer technology in the design and construction of these conventional submarines. So the indigenous component will be high. So MDL will straight away have a benefit on these contracts. Notwithstanding that, once we gain, the know-how in the design and construction of these submarines, we will also benefit in both maintenance of these submarines which are in service in the navies all over the world, as well as Thyssen Group has said that when they get export orders, particularly in Asia and South America, they will look at constructing it in MDL for their global orders. So there will be a twofold benefit for MDL from this collaboration with TKMS.
It sounds very significant, sir, this whatever you have said right now.
Yes, it is.
Okay. Thanks a lot.
Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Ms. Jyoti Gupta for closing comments.
Thank you. On behalf of Nirmal Bang Institutional Equities, I would like to thank the management of Mazagon Dock Shipbuilders Limited for the call, and I also extend my gratitude to the participants for joining the call. Rupita, you may now close the call. Thank you, sirs.
Thank you very much.
Thank you. On behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.